Good morning, traders. Welcome to the live stream. My name is Charles Gough. I am from a community called Pirate Traders, where we are focused on the ES, the NQ, and how they move through the two-way auction process. If you could please just jump into the chat and let me know if you can see me and hear me okay. I would appreciate that. All right, so what are we looking at here on the chart? We are looking at the S&P 500. We're looking at the ES futures contracts. That's my bread and butter, my main focus for trading. So this is what we're going to be talking about this morning, and we're going to be doing some analysis about what the market is likely to do today and how we can look for trades based on what could happen today and then over the next week. Again, if you guys wouldn't mind just jumping into the chat and letting me know if you can hear me okay. Thank you. Okay. All right. So let's start with a longer time frame analysis. We often like to start by looking at a longer time frame, even though we trade on a shorter time frame, even though we're mostly day traders or swing traders that are sitting in trades for, 3 days to 3 weeks type of period. We still want to look at a longer time frame because it helps us have context to understand the smaller time frame. So first and foremost, let's look at the monthly chart. What we can see here is that we have been in balance for the last few months. Okay. The market had momentum. It was moving in a certain direction last year, but then we came to a screeching halt and we've just been going sideways ever since. Okay. So bigger picture, the market is balancing. But what information did we get from this balance? We spent 3 months going sideways in this range up here, and then we still had to go make lower monthly lows this month. So that tells us that we were not able to bring in buyers by spending time at the highs. So there's 2 ways you can bring in buyers. You get your momentum and the market moves in a certain direction. You can either use time by just going sideways at higher prices until the market brings in enough buyers to keep going, or you can retrace with price. That's the 2 different ways that you can balance off momentum. Well, if we now know, starting this month, when we made that lower low, that we are no longer balancing with time on a monthly basis, what are we balancing with? Price. Okay, so that tells us we need to pull back with price. So it's a little bit bearish to see. Let's take a look at the weekly. Well, if we look at the weekly, we can see that momentum building to the downside. Okay, we can see for weeks and weeks and weeks and weeks, the market was just going sideways in a range. But last week, something finally changed. Last week, after months of waiting to break out of this balance area that we had been stuck in, we finally did it last week. We were able to break below the balance area low and close at the end of the week below that balance area. Every other time, we pulled back up. Okay, but this was the time where something was different, where last week we were able to break out and stay broken out. So what does that give us on a weekly time frame? Again, we're looking at the end of last week. We have a trend on the weekly time frame, lower highs, lower lows, multiple weeks in a row. What do we have now? Since the weekend, gapped lower, what is the market giving us now for this week's weekly candle? Another week of lower highs and lower lows. So that's telling us we have momentum down. Balance leads to momentum. That is the thing. When price is in a range and it's going sideways and it's trying to figure out what it's going to do next, whenever it does finally figure it out, it makes a big move. Okay. Why? Because it's breaking out of balance. You've been winding up that spring tighter and tighter and tighter. Okay. Now, as far as this balance area is concerned, we've already made a big enough break. We technically, the overnight low could be the low, and that's it. That's as far as we need to go. But it is still a sign of momentum. You break out of balance, you get momentum. So that also is bearish to see. Let's zoom in and let's take a look at the daily chart. Same thing. So just another way of drawing that balance area was this ascending triangle that we had on the daily chart here. Okay. That's another form of balance where we're seeing the market working its way in a range, trying to figure out where it wants to go next. Again, last week it broke out to the downside. Okay. We closed on Friday outside of this trend line. that had been acting as support for the market right up until Friday. Okay. We can zoom in and we'll take a look at it a little closer here. You can see that on Thursday, it held as support. On Wednesday, it held as support. On Monday, it held as support. On Tuesday, we looked below it, but pulled right back up. Okay. So this trend line was doing its job all week last week, holding this market up. But by Friday, when we closed below it, we had broken out. Again, bearish to see. Okay. You break out of balance, you get momentum. So far, every single thing we're looking at is pointing down. It's telling us this market cannot bring in buyers here. It is going to need to go to a cheaper price in order to convince those discount shoppers to step in. So now we're saying, okay, we're intraday traders and we're looking for trades today. If all of these signals are bearish, okay, then does that mean that we should be shorting the market right now? Go short, go short, go short, right? Not necessarily. Because there is one last thing that we need to pay attention to. We need to zoom in and we need to look at what has changed specifically from Friday's close, from where the market was on the close on Friday, and where we will be when the market opens here in about 25 minutes. Okay? That's the last most important thing. And for that, we have an unfinished auction. We have what we call a gap down. Okay, so we measure the gap as being from wherever the opening price is today, which will, let's say it was right where we are now, 66.70, right? To the low from the previous day. So that would be the low from Friday, 67.16. So right now, that's our gap. And as long as that gap is still there, as long as the regular trading hours market has not come back up to 67.16, we need to be aware of that level. That is an unfilled gap, and that's important because it's a magnet that's pulling on price. Now, is it such a strong magnet that the market can't just keep going lower today? No, it is not. Okay, the market can absolutely open and start selling off and just instantly go lower. That is totally a possibility for today. And as a matter of fact, I would argue it's more likely because of the size of this gap. Because this gap is so large, it's actually probably more likely that we'll open and just go lower. But we don't want to forget about that gap. The first order of business for the market will be to try and fill that gap, to try to poke up and get to yesterday's low, to Friday's low. Okay. Whether it will or not, I cannot predict right now. There's no way for me to make a prediction before the market opens as to whether it will be able to fill the gap or it won't. I will know what it's going to look like if it is going to fill the gap. If it is going to fill the gap, the first move will probably be down. Then the market will come back up through the opening price. Once it comes back up through the opening price, it'll get short covering. We'll see that in Bookmap. We'll see large green dots at the highs as the market pops very quickly. Pop, pop, pop. Okay? That would be short covering. Now, if we get short covering and FOMO buying, so then it pops higher, pop, 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 and buyers start stepping in at higher prices, there is absolutely a chance we fill the gap today. Okay. And that's what it would look like. Short covering plus FOMO buying. The target for all those FOMO buyers will be the gap fill. So if the market does get to yesterday's low, if it does get to 67.16, there's a very high probability that's where it runs out of steam and then turns around and starts going lower. Okay. Because anyone that's going long this morning is targeting that gap fill. So that's where they start to lock in profits. And any sort of stronger hand sellers that want to get short are going to wait for the market to get back up in yesterday's range. That's where they're going to start shorting the market. So if the market does fill the gap today, there's a very good probability we will get resistance and then turn around and start heading lower. If, for whatever reason, it's not impossible, although to me very unlikely, if we do push up into yesterday's range and then stay there and continue to get new buying, well, then we have to completely reassess our entire framework here. Okay, because that would mean this was nothing but a liquidation and that we've retraced it and that we're bringing in new buyers. And so that would actually be very bullish to see. But as I said, that to me is the least likely scenario for today. I'm not going to say it's impossible because as soon as I do that, my brain starts to get confirmation bias. So I'm not going to say it's impossible. But what is more likely to me is that either the market will open and chop around for a few hours and then go lower, or the market will open and immediately go lower, or the market will open, fill the gap, and then go lower. These are the things that I see as the higher probability for today. Okay, so next let's talk about the idea of a gap and chop. Everybody wanted the market to make a big move last week when the news about war started, but there was some sort of mechanism in here, we think related to the options market. There was some sort of mechanism in here that just would not let the market break. It just would not let the market get away no matter how hard it tried. Now that's turned off. We know that because of where we closed on Friday and where we're opening today. We know that that pin is gone, that old pin from last week. Okay, so now the market is free. What does that mean? It means that this market can make bigger swings. So my guess is that this morning is going to be something like this. Big move up, big move down, big move up, big move down, big move up, big move down, compress a little bit, then pick a direction and start going. I think we're probably going to get a large chop zone, okay? A large range where the market is going to go sideways because a lot of people, they're not going to have been short from last week. They're going to FOMO into shorts this morning. And a lot of people are going to see this as a dip worth buying, and they're going to want to go long to fill the gap. And so this market is just perfectly primed to have these big, huge swings where they poke up and they make it look like the market's going to go long, and then everyone gets long, and then it reverses instantly. And then it looks like it's going to go short, so everybody gets short, and then it reverses instantly. I think we are perfectly primed for that type of gap and chop this morning. And then door number 3 is a straight up gap and go, which would mean like the market opens, maybe it dances around for a few minutes, but it picks its direction and it just starts moving down. This is also possible for today, that we could just straight up start going lower. If that happens, the goal will be to get into a short as quickly as possible and stay in that short as long as possible. Push it for as far as we can. But as I said, we cannot ignore the gap. So I can't make a call right now saying go short this minute, and when the market opens, it's going to instantly start to sell off. I just can't make that call yet. I have to wait till the market opens and see if that selling off takes place. But if it does, remember the context that we talked about when we started the day looking at the daily, the weekly, and the monthly. Okay? We have just broken out of balance. We are likely to get momentum. We are likely to get continuation in the price move to the downside this week. So we want to have that as food for thought as we look to enter trades first thing this morning. You don't have to rush into a long or a short. You can wait. Even if the market makes big 30 to 40 point swings, both directions, back and forth, you can still just wait. If you do want to enter a trade this morning, whether it be a gap fill trade or a gap and go trade, targeting continuation lower, either way, don't get squeezed. Don't get taken out of your trade early. So whatever stop you use to get into the trade, just leave it there. Don't try to move the stop or they will come down and take out your stop. Just wait until the market gets to your profit target, whatever it may be. Don't get squeezed early because there will be big swings both ways. And that's what the market loves to do, to make a high, get everyone short at the low, and then come back and get just above that high to take out their stops, and then turn around and head right back down to get just below that low to take out their stops. I'm telling you, this is one of those days where it's going to do that. It's just one of those days. All right, so let me know in the chat what you think the market is going to do today. Are we going to fill the gap? Are we going to gap and chop? Are we going to gap and go? In the meantime, good morning to Michael, Silver Media, Tom. He says this should be interesting. Yes, sir. Ray J in the house. Mark is here. Raphael, Trevor, and Will. Good morning and welcome. We are hanging out in the Discord as well, in Bookmap's Discord. So if you are watching this from the Discord, make sure you head to the English Traders floor to leave your questions there. Good morning to Trader and Steven. Appreciate you guys. Trader says, I guess it all depends on what crude oil is doing. Yeah, and you could say what crude oil does is based on what's happening, with the Strait of Hormuz. You could say that as well. But for me, that's just too much stuff to think about and try to keep track of. So I'm going to stay solely focused on the price action on the ES. Where does it go? How much time does it spend there? How much volume does it bring in? The more time it spends in a location, the more likely it is to keep moving in that direction. The more volume it brings in, the more likely it is to keep moving in that direction. Whereas the less time and the less volume, the more likely it is to reverse and come back. So I won't know why the volume is suddenly changing. Maybe it'll be something to do with the news. Maybe it'll be something to do with the prices of oil or the prices of gold or the prices of some other asset. It absolutely could be that that's what causes the ES to change. I will know because I will see the volume tapering off and we're spending less and less time. That's when I'll know we're ready to change. Good morning to Al. Welcome, welcome. So let me get this straight. We've got 75 people hanging out right now, and none of you want to make a prediction for what the market's going to do? Let me know in the chat. Are we going to fill the gap, or are we going to get a gap and go? At least make that prediction. You guys are doing your pre-market analysis. You're sitting there. You're looking at the charts. You're trying to decide what trades you're going to take today. Surely you have a plan for taking a trade if you're going to take a gap fill trade or a gap and go. Let me know. What is it that you're seeing? Yeah, man. Ugh. A person would love to short crude oil right now, wouldn't they? Oh, man. But you can't do it. You can't do it. Don't you do it. Might be too early. Let's take a quick look at the NQ on the daily. So the NQ has been doing basically the same exact thing as the ES over the last few weeks, or the last few months, really. But it has been doing it sort of slightly afterward. It's not been perfectly in line with the ES. The ES tends to sort of make its move first, and then the NQ follows. So the NQ is still in a balance area. I mean, you can just look at this chart, and you can just see that the NQ has not broken out of its balance yet. This is a fucking daily chart. I never thought I would see the NQ go sideways for this many days. So technically the NQ is less bearish than the ES, because if it were to get a gap fill this morning, that would actually be a look below and fail of this balance area low, which is actually quite bullish. But let's take it one tick at a time. Let's see if the markets can fill the gap, and then we'll see if we get resistance once we do. I would describe both as bearish, without a doubt. Both markets are bearish and likely to go lower. But the NQ is not as bearish as the ES in terms of its overall positioning. Yeah, still an enormous gap to fill. So for the NQ, that gap fill is going to be to 25,4,597. That's what you're looking for. Thank you, Al. Appreciate you. Chris says that he thinks we're going to fill the gap. Catherine says chop, then go. So she's looking for a gap and chop that eventually continues lower. Shk 230 says it's going to fill the gap. Raphael says it's going to fill the gap and then go down. Ray says no gap fill. Trevor says gap fill, then reverse. Mark says gap fill and move with Papa Powell's money printer. Auntie says good morning. Massive in the house. Good morning to you. All right. So we got a couple guesses, more leaning towards the gap fill and then go than a straight up gap and go. I will just tell you guys, anytime I see a gap of more than 20 points, I automatically remind myself it is less likely to fill. Anytime you're more than 20 points. So the gap fill is to 67.16. So if we open anywhere below 96, there's a higher probability we get a gap and go. Now, that doesn't mean you can't fill the gap. We fill the gap all the time when there's a large gap. It's just probabilities wise, it's less likely. So when I see a gap this large, my brain generally assumes gap and chop or gap and go. And then if we start to get the gap fill, then I have to change my mind very quickly. You know what I mean? And get on board. Michael, also on the gap fill and then drop. Boy, everyone's expecting that, huh? We will have to wait and see. What will probably happen, since so many of you are saying gap fill and drop, what will end up happening is we will push up. We will reverse exactly 1 point before the gap fill, and then we'll drop. That's how they're going to do it. That's how they're going to get you. So you never have a chance to take profits on your long, and then you're losing money while it's going down and you don't know how to get short. Boy, they love to play those games. Still got about 7 or 8 minutes. If there are any questions from the chat, let me know. I'd be happy to answer your questions while we wait for the opening bell. South Tribe says, we already took out the liquidity to the downside on the NQ. So I'm expecting chop chop, see money take money kind of day. Yeah, if you like trading chop, that is what I'm expecting. And I'm expecting it to be big ranges too. So I'm expecting, a 30 to 40 point range on the ES where it goes up 20, 30 points, down 20, 30 points, up 20, 30 points, like big swings, both directions. There's going to be a lot of people in the first 2 hours today that are repositioning based on this breakout. So you'll get lots of people going long and lots of people going short, and that creates a lot of tug of war. So if you like trading that type of environment, I think you're in for a good one. They call it gap and chop. One important reference that I use when we have a large gap like this, and I'm trying to figure out whether we're going to fill the gap or not, is I look at large liquidity nodes that are sitting around in random locations on Bookmap. So right now, the ones that are jumping out at me are going to be right here around 6,700. There's that large node above us. There's this large node at 66.62 and 66.50. You can see right in here. Let me change my colors so you can see that better. There we go. Got that large node in there. Then we got these large nodes down here, 6,600, 65.87, and then a little bit lower here, just below 65.75. Okay. Now, none of these levels really matter to me as like support or resistance levels or something like that. But once that opening bell rings, how these levels change will be very important to see. If they suddenly start to disappear, that's going to be the information, right? Now, if they're slowly tapering off, less and less volume, that's not as helpful. But if they instantly go dark, if out of nowhere they just turn it off at any of these levels, that will be a key moment. And depending on which it happens, we'll know what to follow through. So if the market were to open right now, and let's say a bunch of these lower levels were to disappear, then I would expect we're going to head up and fill the gap. Or if the market were to open and this big level at 6,700 were to start to disappear, it wouldn't disappear all at once. But if it were to kind of switch off like this, relatively all at once, well, then I would expect that we're going to get a gap and go, and we're going to continue lower. If nothing changes with these large orders, if they're just still sitting there doing nothing, 5 minutes from now, 10 minutes from now, 15 minutes from now, an hour from now, if they're still just sitting there, that's going to increase the odds of a very choppy sideways type of morning. So I may not know who these market participants are that put this liquidity here. I may not know what their plan is for the day today, but I will know when their plans change. And that will be because that liquidity disappears. And whatever liquidity disappears, the market's going to move in the opposite direction. Okay. Much like weak references, we think about these large nodes of liquidity as magnets that pull on price. So right now it's about even in terms of what's above and below. So there's no clear edge. But if a bunch were to suddenly disappear below or a bunch were to suddenly disappear above, well, then that magnet is going to move in the direction of wherever the liquidity stays. So that will be one more thing to keep an eye on here when the opening bell rings. Frito says the market is going to go straight up today because last night he added to a long swing trade around 66.20, then scratched it an hour later. Yeah, that would be a great trade if you just stayed in it to just move your stop above your entry right now and just leave it. But no, I don't think it's going to go straight up. And if it does, I think it'll only go straight to fill the gap. Ray says, is there anything notable about the overnight profile? No, nothing jumps out at me about this overnight profile. We can expand it out and see. Expand that profile. Yeah. So the first move down, that was obviously just liquidation, right? That was just, the market opened and it instantly started to sell off. Then you could see in Asia, they tried to push the market lower. Okay. They were thinking this market is going to go down, so they were pushing the market lower. It retraced, and they basically just squeezed sellers to get back to this area around 66.48. Then again went sideways for a while, broke out of that to the upside, and we've been going sideways ever since. So I just see this as a giant bell-shaped curve. Overnight inventory is net short, but it's not that crazy net short because most of the people that got short in here, right, they already got squeezed. They already exited. So the gap is the net short, right? Anything below yesterday's closing price, the participants have to be short. But I don't think we need that gap fill as much because we've already squeezed a lot of those sellers in the way the overnight came back up. So to me, it's pretty neutral. Nothing super special about it. Unfortunately, we just got to wait for that opening bell to ring. That's when the important information comes. It's how the U.S. market reacts to this gap down that matters. And we are 1 minute away. Mark says, are we in negative gamma? I would have to take a look at spot gamma. Yes. Negative gamma, again, implies larger swings, bigger moves. As the market is going down, market makers are selling with it. As the market is going up, market makers are buying with it. So we're getting bigger swings. As I said, today is not a day for moving your stop. Today is a day for waiting to let the trade play out, because if you move your stop, they'll come back for it. Big swings up, big swings down. All right, the market is open and the first move is to the upside. That is actually less bullish to see. So now we're looking for a gap fill as long as we remain above the opening price. Let me dial in here. That's going to be 82, 66.82. So as long as we are above 82, we are looking to try to fill the gap. Once we cross through 82, we're no longer trying to fill the gap. It is either a gap and chop or a gap and go. So we could describe ourselves as bullish above 82, neutral to bearish below. Let's see where the market will go. Okay, so this first little poke up that we just made towards 94, that took out a lot of stops. How do we know that? Because we can see these big green dots are at the highs. Okay, so when you see a market pushes up and then it creates green dots, pushes up and then it creates green dots, that's stops being taken out, or FOMO buyers, but obviously much more likely to be stops in this case. So that tells us our first poke up was able to take out stops. That increases the odds. We'll try again. We'll make one more little poke for 95 to see if we can take out some more stops. Of course, if we drop through the opening price, well, then we're neutral. Okay, somebody's selling the halfback right here. See that big red dot? Okay. So now as we cross through the opening price, this is an important moment because we have to make a decision as a trader. Do we think this is going to be a gap and go? Do we think we're about to start liquidating this market and dropping really, really fast? Or do we think it's going to be a gap and chop? Do we think they're just going to poke down and then reverse and come right back up for the high? We need to know the difference because if this is going to be a gap and go, we want to be getting short right now. Whereas if it's going to be a gap and chop, we want to wait it out. My prediction is that this is going to be a gap and chop. I think we're going to come back up for these highs. The reason I say that is because, as we just discussed, they were able to take out stops. So the market knows there's liquidity up there if it comes back. And boy, does the market love to come back for liquidity. Also, we still have an unfinished iceberg. So that iceberg that we just created at halfback a second ago, right here, that's still there. So the market needs to come back to it, which would have the market crossing the opening price again. So if I know we're going to cross the opening price multiple times, I'm guessing a gap and chop. So buckle up, kids. Big swings, both ways, up and down. We're going to need a lot of confirmation to assume that we've got to go in either direction. We got to see new buying up at the overnight high to assume we're going to get that gap fill, or we need to start to see a lot of new selling below 65 to get bearish here. Otherwise, I think we're about to just bounce all over the place. So this is where we're zooming out to see if anything changed with those large nodes of liquidity that we were talking about before the market opened. Well, not really, right? They disappeared a little bit right after the market opened. They faded a little bit, but they brought it right back. So whatever mechanism is in play right now, or was in play, pre-market open, it's still in play. Another reason to expect a gap and chop. Structure says, I want to get the Bookmap Lifetime Global. Should I wait for a better deal? Oh man, your timing on that question is horrible. It's March right now. So the really good deal is New Year's. That's when, like, around Christmas and New Year's is when they do the really, really good deal. So to answer your question, I would say no, just buy it now, because you don't want to have to wait till Christmas. You don't want to not have valuable market generated information that you can use in your trading for the next 9 months or whatever, waiting for that big deal to come out. So no, I would say go ahead and sign up now. It will pay for itself. This is what people struggle with when it comes to spending money, when it comes to trading, is like, they don't think about the fact that trading is a business. You need to spend money to make money in business. So if you spend a couple grand, buying a software, a lifetime license to a software, the question you have to ask yourself is, over your lifetime, over the next year, 10 years, whatever, is that going to pay for itself? Will you have seen a signal in that software that would have gotten you into a trade where you would have made a couple $1,000s? Or will seeing something in that software stop you from getting in a trade where you would have lost a couple $1,000s? If that is true, then it's worth the money to spend the money on the software. People don't think about it like that because they want to think in a very literal way. Like, if this month I was a profitable trader, then it's okay for me to pay for my software this month. If next month I'm not profitable, then it's not okay to spend the money. And it's like, that's not how businesses work. You got to spend the money every month. You got to have the data available for you every day you sit down to trade. Some days you'll make money, some days you won't. That has nothing to do with whether it's worth paying for the data. The data is just part of what gives you the edge, so you can make the money when you can. Okay, so an important nuance just happened here a minute ago. They disappeared that iceberg. So that magnet that I was paying attention to up here, that the market was likely to come back to purely because of that magnet, that is now gone. This doesn't actually change anything. I still think we're going to get a gap and chop here. But now I am very closely watching this area around the opening price for resistance. If we come back up into this again and it holds as resistance, that is a short, in my opinion. But remember, for gap and chop to work, first they have to get everybody short. They got to convince everybody the market is going down first before they turn around and squeeze everyone. And that's what I think we're seeing right here. Ray says this is the first pullback to the 200D EMA since early April 2000 lows. Interesting. So the daily exponential. That's not something I look at, so I have no edge there. Okay, moment of truth here. We're looking for a bounce right around 59. Again, to come back to that opening price and look for resistance there. Trading in these environments requires absolute mental discipline. You know there's going to be big swings. 30-point move down, turns around and comes right back up 30 points. You know you're going to get these big swings. So you can't FOMO. You can't chase. You can't force trades. You got to just be patient. Okay, no bounce yet. We're now looking to test 66.48 for support. Bam, bam. Crypto Writer says, good morning. Oh my God, a time change in the US and not in Europe again. So trading 1 hour earlier today. Yes, that is very confusing. That we get a time change in America yesterday, but you guys don't get it for another couple weeks. There's a question in the Discord here from Steven that says, Charles, do you trade options? Yes, I do trade options. They're not really my preferred choice. I much prefer to trade futures over options, but sometimes there are just certain trades that I feel using options is a better way to handle that specific setup. So if it's a swing trade, if it's a trade that I want to sit in for multiple days, I always prefer to use options for that than futures, just because you take off the risk of a big overnight move stopping you out. If I have a trade where, like intraday, I know something is going to happen, but I can't perfectly time it. So this is not, I'm not giving you a trade idea here, but just as an example, let's say I was looking at this chart right now and I was like, I know this market is going to push lower and then find support and come back up later on in the day to fill the gap, right? Like I'm convinced that that's going to happen, but I don't know how quickly. Like we may grind down here for 4 hours and then turn around and come back up for it, or we may do it for another 5 minutes and then turn around and come back up. Well, I would not want to go long a futures contract if that's the case. If I'm going to get long a futures contract, I want to know the next move the market does is in the direction of my trade. So if I wanted to get long here, but I couldn't perfectly time the entry, what I would do is right now I would just buy a call option, probably about halfway between the current price and my target. So it'd be right around the open. Probably that's going to be 69.90 would be the strike price. I would date that out at least 4 or 5 days, just because I don't like trading the shorter dated stuff. The time decay is too strong on those. So I would be buying one that's dated out, say 5 days from now. So probably next Monday. It could be this Friday, could be next Monday, could be next Wednesday. And I just go ahead and buy a call halfway in between. And then if, the market goes lower for 3 or 4 hours and then comes back up and fills the gap later on in the day, well, then I can lock in profits on that trade at that point. And I'm not forced to sit in a long, futures contract all day waiting for this thing to happen. So I don't take trades like that often, but there are just sometimes I look at a chart and I know what's going to happen. I just don't know when. You know what I mean? I just don't know if it's going to happen right now or it's going to happen 3 hours from now, but I know what's going to happen. And so for those, I like to use options. And I'm generally just using either calls or puts, or call spreads or put spreads. I'm not doing any of the more complex option selling, just buying or buying a spread. Okay. So I'm going to say two things which are going to be confusing because they're contradictive, but to me, this is shortable right at this moment, but it's a very quick short. So it's a short that you would get in, and as soon as the market starts to move in your direction, you want to move your stop below your entry. I absolutely 100% think we're coming back to the opening price, but we haven't quite brought in enough buyers for that bounce yet. So if you wanted to take a quick little scalp short, you could, but just know this market is looking for a buyer to come back up to the open. So it's not a short you want to fall in love with at the lows. Remember, they're trying to get everyone short at the low before they make that instant reversal. So if you are getting short here, you don't want to fall in love. You want to move your stop below your entry as quick as you can. Muhammad says, what is the monthly cost for Bookmap with the Essentials add-ons? I have it tied to Thinkorswim and it's very slow. Yeah, so I don't know pricing wise. It's different depending on how you access it. I have a link that I have that has a discount code. I don't have it ready to share with you right now, but I'll post it in the Discord at the end of this stream, and you can check the prices there. But it's well worth it. Even if you don't buy with a discount code, it's well worth it. Again, what you're giving yourself when you look at the Bookmap software all day, every day, okay, is you're giving your brain a chance to learn how to use the tool. You're never going to learn how to use it if you're not looking at it all day, every day. If you're not watching how every type of market, how does it trade when it's a, tight range-bound market? How does it trade when it's a wide, range-bound market? How does it trade when it's a trending market that's moving in a certain direction? What does a small trend day look like compared to a large trend day? Until you let your brain watch the market move on the Bookmap software over and over and over every single day, you're not really going to have the skill to be able to use it to have it help you at all. It's really about that pattern recognition. That's what the skill is, right? The skill side of the argument is you train your brain to be able to see it, like a baseball player gets really, really good at being able to see the way pitches come in, right? You don't get better unless you go out there and stand on the plate and take a swing and learn from experience doing it over and over again. So if there's any kind of software that you've been thinking about, you want to incorporate in your trading, just spend the money, get the software and start incorporating it and learn how to use it. And if in a month or 2 months or 3 months, you decide, this isn't really helping, then get rid of it and find something else. But, too many people, I think, they try to find ways around having to spend money in trading. They don't want to spend money on education. They don't want to spend money on books. They don't want to spend money on software. So they're always trying to find what's the cheat code that I can use to save money, where I can do this and that and that and that. And it's like, what you're missing out on while you're spending all that time working on your cheat codes to save money is you're missing out on building a skill set that will actually make you money, which is an important part of the process. And you got to have the tools to build the skill set. It's as simple as that. Okay. So now we're in an area where the market might find support. This to me is really important because the question we're asking ourselves is this a gap and chop? In which case we're going to reverse and come right back up? Or is this a gap and go? In which case we're going to keep going lower. If I am right, and this is a gap and chop, we should catch a bid here. We should reverse and try to come back up to the opening price. Whether we get there or not, we'll have to wait and see. But if we get more new selling down here, then I'm just wrong on my read of gap and chop, and it's a gap and go. So we're looking for support pretty much above 44 here. And if they can hold it, then I'm still right about the gap and chop. Oops. Also, for what it's worth, if you got short a few minutes ago in this node up here around 56 to 60, well, now it doesn't matter because we're passing through it. But I was going to say, if you had moved your stop below your entry, this would be a great place to start trailing that stop. Although you probably just got taken out. Which I think is a good thing. Alessio is confirming that yes, everything starts an hour earlier or ends an hour earlier for the next 3 weeks if you're outside of America. Sorry, guys. That is very confusing. Stephen, as a follow-up to his question about me trading options, any advice on learning about options the right way? Any tools one can use to learn and help with your learning curve? Appreciate your answer. Yeah, so options, like so many things in trading, it's really a person-by-person thing. You really got to kind of figure out what's right for you, whether trading options at all is right for you, yes or no. And then if your approach to trading options is the right way for you to be trading options. So there's a lot of people out there that are better to learn options trading from than me, because I don't approach trading in a complex way. I've never been able to. And a lot of the advantages to options is you can make a lot more complexity in your approach to markets. So for example, if I think a market is going to go sideways, I'm going to buy a call near the lows and then take profits near the highs, that type of thing. Whereas you could put on an iron condor or a butterfly or something like that, where you could just trade the range using options. So I wouldn't describe myself as a good person to learn options from, because I use them super simple because that's all that works for me. As far as different places to learn from, there's a book called The Options Playbook. Yeah, this one right here, The Options Playbook. This one is the best book I found for learning options. When I first tried to get in it, I got tons of recommendations, and almost every book I tried to read, it was way too complicated. They just make options like so complex that it's hard to wrap your mind around, particularly with the Greeks and the changes in the Greeks. So this book right here, Options Playbook, was the easiest one. It kind of maps things out in a visual way that just makes it a little bit easier to digest. So if I had to make a book recommendation for options, that would be it. The other thing I will say, as far as tools for working with options, find somewhere that will let you paper trade options. There's lots of, places that will let you do that. Paper trade options for a long time, because the time decay and the way that the Greeks affect the price of things is really, really important. So overall, the more people that want to buy or sell options, the more expensive options become. So for example, right now, there's a very high IV in options, right? They're very expensive because there's a lot of people using options to try to protect themselves from potential downside because of what's happening in the Middle East, So right now, options are super expensive. So today would be a day to probably say, I'm not going to use options. I'll use futures today, as opposed to a day where, the options are much cheaper, in which case it might be better to use options. So for example, I will never use options a couple of days before FOMC. It's just not worth it. They get so expensive because everybody's buying options that the risk to reward isn't really as good anymore. Whereas, in that time, it's better to trade futures. If it's a quiet time in the world of options where things have gotten kind of cheap, well, then options can be the better choice than futures. So it's a lot to wrap your mind around. It's not as simple as, I think the market is going to go up, I buy this option. I think the market is going to go down, I buy that one. You have to think, on multiple levels. You have to be thinking about time, and you have to be thinking about implied volatility as well. And so it takes a lot of practice to wrap your mind around it. So my number one advice is paper trade options and learn those Greeks. Okay, so where are we at right now? The answer is I don't know. So there is still one of two things that is happening here. Obviously, this is not a gap fill, right? The market is not trying to fill the gap. So it is either a gap and chop, meaning we're going to go up and down through the opening price a bunch of times in the hours ahead, or it's a gap and go. We push down, we're spending time, we're bringing in volume, and we're going to keep going down. And, the live stream is over right now, and I'm not yet able to answer that question. So here's the way I would describe it. If the market comes back up to this area just below the opening price, so we'll call it 66.80. Okay. If the market comes back up there and it gets resistance, like it's clear as day, it gets resistance. The ticks get smacked down. Something starts to change with the order flow. Orders start to get pulled below. They start to get added above. Something clearly showing us we're getting resistance. If we get resistance there, then it is a gap and go. It is bearish. It will keep going lower. If it crosses through the opening price, though, then it's not a gap and go. It's a gap and chop. And what's going to be the next thing it's going to do? Short covering, probably to get all the way to the overnight high. Just remind yourself, it's not a gap fill. It's a gap and chop. We are expecting large swings, 30 points, one way or another, back and forth and back and forth. So if we cross through that opening price and we start to get short covering, you want to keep that in mind. If you're going to be going long, you want to move your stop quick because they are likely to get to that overnight high and then turn around and come right back down again rather than fill the gap. So they're going to keep doing this, probably for hours. They're going to keep convincing everyone to go short at the lows and then instantly turn it around on them. Convince everybody to go long at the highs and then instantly turn it around on them. So be prepared for that. Speaking of which, looking for resistance starting right now between 74 and 80. So earlier we talked about what happens when this suddenly changes. Looking at the order flow. We were talking about this large node since pre-market sitting up here. Well, it was sitting there and the market was grinding and grinding and grinding lower. And then they disappeared it about 5 minutes ago. They disappeared that large node. What has the market done since they did that? It changed. It was grinding around down here and now it's poked back up towards the opening price. You see that? That change right there? Do you see how that corresponds with that change at that exact moment? Let me zoom in here. That corresponds with that exact moment where something changed with the order flow. This is what we want to obsess over today. We want to see these key moments where something starts to change with order flow. That's when the next thing is going to start happening. So the first thing this morning was push it down, get them short, get them short, get them short, get them short, get them short. Disappear that liquidity above, bring the price back up to the open, right? And as long as you keep seeing that, these big, huge things randomly change and then price randomly changes from there, you can expect the gap and chop is going to continue. All right, I'm willing to call this a gap and go now. I do think they want to come back up to 66.77 once more. We still have that iceberg there. If they disappeared it like they did earlier this morning, it won't matter. So it only matters as long as it's still there. If that disappears, then it's not a magnet anymore. But this, to me, that little sell-off we just got right now, that's a sign of new sellers getting in. And that's right where they should have got in, just below the opening price. So I think we do have a gap and go. I think it's going to be a slow melt to the downside. So why do I use the word slow melt? Because I mean it's going to go down, and then it's going to come back up again. And then it's going to go down and come back up and go down and come back up and go down and come back up. But I do see this as bearish and looking for continuation lower from here. So if we come back up and then this node around 77 holds, that's, a good point to get short for continuation lower. Or if this disappears at some point in the day, the next resistance you see, you can short. This is a gap and go to the downside. Bearish to see. With that, I will say goodbye. I wish you guys the very best. If you are a member of the Pirate Traders Brigade, head on over to the private stream and we will see you there. If you are not a member of the Pirate Traders Brigade, well, what the heck, man? Why aren't you a member? For just $20 a month, you can get these live streams with me every single morning. So before the market opens, you get an email with my insights about how to be prepared pre-market. Once the market opens, you get to hang out with me and hear my opinions live in real time. You get to see my charts in real time, my support and resistance levels in real time. If that's something that you might find helpful, if you think in a month of trading with me by your side every single day, you could make $20 of profit, or I might help you stop you from losing $20 of losses, well, then the membership is paid for itself. And we'd love to have you join. You can see a link at the top of the page, piratetraders.io/join. We'd love to have you in the brigade. Speaking of which, members of the brigade, let's set sail.